Guys, welcome to day 5 of the bootcamp, and today we are going to be talking about risk management essentials. Now, when day traders hop into the market, they tend to look for strategies, they tend to look for entry protocols and exit protocols, but the biggest mistake they go through is they don't learn risk. Okay, now for me, it was a big pill to swallow because I lost a lot of money until I realized that risk is way more important than my strategy. And the reason why is way more important is because your win rate doesn't have to be 100%. Your win rate doesn't even have to be 50%. For example, for me, my win rate is around 40 to 60% on the market, yet I am still profitable. Okay. And learning risk management helped me change my perspective of the market. It helped me change the way I thought about the markets because I kept chasing, trying to get the winning streaks and trying to increase my winning streaks. And I tried to decrease my losing streaks, which is fine. But risk management is what helps you when it comes to being a profitable trader on a long-term basis. So the reason why we're going to still be looking at the charts is because today we're going to go through a few things. We're going to go through pips. We're going to go through lot sizes. We're going to go through risk to reward. And I'm going to explain to you guys everything when it comes to those three topics, okay? I'm going to show you an example of an entry. I'm going to show you what we're risking and how we can make money in the markets, okay? So before we actually look at anything towards the market, I want to just give you some keywords so that you guys know what I'm talking about, right? So first thing first is pip. Pip is point in percentage, okay? Point in percentage. What is that? That is basically the movement of price from one point to the other, okay? That is what it is. Okay, so if you see a bearish candlestick or you see price, for example, here is going down, we would say this moved, for example, 30 pips. Okay, what does that mean? It moved from this level to this level. The distance between these two levels are 30 pips, point in percentage. That's what it is. Okay, number two, lot size. Okay, this is basically position size or how much you're putting into the markets for that specific trade. Now, lot size is very, very important. So we're gonna get onto lot size a little bit more later on. But at the moment, all you need to know is your position size or how much you're putting in to the markets, okay? Number three is risk to reward, okay? A word that you are going to see a lot. You're going to hear me speak about a lot. You are going to go through it a lot and you need to understand it, okay? Most traders don't understand that their risk to reward can change their whole journey as a trader. They can go through having a 20% win rate, right? And be break even as a trader, or anything above that as a profitable trader, right? You only need around a 20 to 30% win rate when it comes to your risk to reward, right? And I'm going to explain to you about that. I know a lot of you are probably thinking, wait a minute, how can I have a 20 to 30% win rate and still be profitable? Don't worry, everything will be answered by the end of this video, but I just want to give you guys prompters on why these are important. I know I am going through the extreme. I know I am talking about things that doesn't make sense at the moment, especially as a trader. You're probably thinking, wait a minute, 20-30% win rate, no one has that in the markets. Everyone has around 80-90% win rates if they're profitable, right? No, that is wrong. Okay, that is completely wrong. Anything you've learned from other traders saying that you need to have certain risk to reward ratios to be profitable, or you need to have a certain lot size or anything like that, completely garbage, guys. Okay, the reason why I want to teach you everything from the essentials is so that you can develop your brain to understand these things and make up your own mind to it. Don't follow these traders because they have a 1 to 20 risk reward ratio. Do not follow the traders that have crazy high risk reward ratios because they're experienced in their own game. They understood the markets in their own way. You need to do the same thing. Okay, so for example, we have $100 account, okay? Now, traders, if you have $100 account, right, roughly how much would you like to risk per trade, okay? Not risk per day or month or how much you're willing to risk for a few trades. No, we want to know what is your risk per trade, okay, from this $100 account. So with this $100 account, okay, what are you trying to risk? Okay, so for me personally, I would like to risk 5%, which is $5, okay? 5%, $5. Now, you're probably thinking, but people trade 1 or 2%. Well, guys, we have a small account, right? We need to trade a little bit higher. We need to risk a little bit more to get a return, okay? A better return than having a $1 or $2 risk, okay? That's the market, okay? I am giving you guys the raw information that I would tell myself. Me personally, I would like to risk $5 per trade. If you like to risk $10 per trade, that is completely fine. If you like to risk $50 per trade, that is completely fine. It's up to you. But you have to understand that when it comes to having a percentage in risk, you need to know that, for example, with me, it will take me 20 consecutive trades to lose this. Whereas if you do 50%, it will take you 2 trades consecutively to lose to blow your account. So just remember that, okay? Now, you don't want to blow your account. So for me, I like to risk, depending on my account size, around 2% if it's a large account. Large account meaning anything above, let's say, $5,000, okay? And I would like to risk 5% anything below that $500 mark or $1,000 mark, okay? The reason why I would risk a little bit more on a smaller account is because I want to grow this account as fast as possible. I will be willing to take the risk. I will be willing to put in the extra risk, put in the extra, a few dollars in to actually get a better return, and it helps you with your psychology, okay? So $5 risk, remember that, okay? Okay, now let's just say, for example, we entered, and this is just an example, guys. This is not something that I, just thought. I just literally thought of this, right? Let's say we entered the market here, okay? Now there's an entry protocol that I go through regularly, and this is something that I go through, or is in my brain, but we have to kind of do, right? Is we need to, before I even place my position, mentally, I have to think of these things. Number 1, stop loss. Number 2, take profit. Number 3, risk to reward, okay? RR is basically risk to reward, okay? So first thing, let's figure out where we're going to keep our stop loss. Now, usually I like to keep my stop loss before the previous lows or highs, depending if we're buying or selling, okay? So for example, previous lows, probably keep it right here, okay? And I'm actually want to enter on this candlestick. So entering like just below these lows, okay? So if I drew an area right here, if I drew an area right here, right? Just below these lows, okay? Targeting. Now for me, okay, I would like to target the highs, but in this case, the highs over here is only a 1-to-1. If you can see, risk to reward ratio is 1-to-1, basically, right? So it's not really giving me my risk reward ratio that I like. For me, I like to have a 1 to at least 2.5, okay? So I'm actually going to keep that on the screen as well. We want to have a 1 to 2.5 plus risk reward ratio, okay? So just going to keep that here. These are just account, we'll just highlight it as well. This is what we will always have an idea of when it comes to our account, okay? We have $100, we're going to risk 5%, and our risk reward ratio always has to be above a 1 to 2.5, okay? So let's just keep this at 1 to 2.5 right here, okay? Which is actually, ideally, it's actually perfect because at these highs, okay? Pretty good, right? Pretty good. This is the trade. Now, just think that these candlesticks are not here. In this case, we hit profit, but how do we know this? How can we calculate the profit and loss? Because we actually wasn't able to enter, right? Because remember, we don't even know our position size yet. So how would we know whether this is going to be a profitable trade and is it worth it, okay? So we have a $5 risk, okay? Now, $5 risk, and just for this purposes, I'm just going to say that this is a 10 pip, okay? The reason why I'm going to say this is 10 pips is because 33 pips includes me to do maths, and I don't want to do mental maths right now, guys, okay? So let's just say this is a 10 pip stop loss, okay? So that means that the distance from the entry to the stop loss is 10 pips, okay? Now, we want to risk 5%, so $5, okay? So that means that risk has to equal to 10 pips slash $5. Okay, so that means that one pip equals to $0.5. Okay, the way I work that out is basically 10 divided by 5, which is 0.5. Okay, that's just one pip there. That's just understanding what one pip is. Okay, now for example purposes, this is not actually going to be the right thing, but just for example purposes, let's say this is 20 pips. That would give us a 1 to 2 risk to reward ratio, but just to keep the maths easy, I'm going to just call it a 1 to 2, right? Just for the maths, it's 20 pips. Okay, so we know that we're risking $5. We know that, you know, the risk is 10 pips, it's $5. So we know that one pip has to equal to 0.5 cents. So the way I would do it, okay, is I would always have this on deck. One lot size, okay, so actually, yeah, one lot size, so standard, so this is one lot size, so 1.0. That, let's actually do it from backwards actually, so you guys understand. So normally you'll see a micro lot size like this. Micro lot size is around $0.1. Okay, a 0.1 is $1. Okay, and 1.0 is $10. Okay, so that means that if I put on my MetaTrader 4 app, MetaTrader 5 app, if I put a 0.01, that means every pip that it moves is going to be 10 cents. Okay, so because this is 10 pips, okay, I want to do a $5 risk. So the way I would do it is I want to do, okay, it's 10 pips. Okay, so 10 pips, I want to work out what one pip is. One pip is 0.5. So that means I would go for a 0.05 lot size. Okay, 0.05 lot size. Okay, now just to show you guys, you don't actually need to know your reward or how much you're making in a reward, because all you need to care about is how much you're risking. But just for this video, because I want you guys to actually understand how we calculate reward as well, or risk, or whatever distance it is, I want you guys to understand that is I want you guys to learn the maths. Okay, so the way I got this figure is, this is just the standard. 0.01 is 10 cents, 0.1 is $1, 1 is $10. Okay, that's just the standard base rules that you just got to learn. Okay, you can actually have it in front of you if you like, or on a piece of paper. Now you have to always calculate what one pip is. Okay, so for example, on a $5 trade, 10 pips, one pip equals 0.5. We plug that in. Okay, 0.5. Okay, that can line up in this one. So 0.5, we times this by 5. We have to times this by 5. This is 0.05. Simple as. And that's how we calculate our lot size. Okay, so we have 0.5 lot size. Now we can actually officially enter the trade. But for example purposes, we also want to calculate our reward. Okay, so when it comes to reward, okay, exactly the same thing. Okay, reward equals, it's around 20 pips. So that means, so roughly, right, 20 pips would equal to, so we know one pip is 5 cents, right? So that means 5 cents times 20 is around $10. Okay, and that's how we calculate our risk and our reward when it comes to our money. Okay, now TradingView actually makes it very, very easy for us. Okay, we have our risk to reward ratio right at the bottom here, 2.62, right? We have our stop loss, which, let me just keep this as always showing stats. We have our stop loss, which is 33.8 pips, right? It's this point here. And we have our target, which is 88.4 pips. Okay, it's done for us. Okay, so all we have to do really is calculate our lot size. And the way we calculate our lot size, I'll tell you guys again so you guys understand. You first need to calculate how much is one pip. So if it's, for example, 30, let's say it's 30 pips, for example, right? 30 30 pips, right? You do 30 divided by 5, right? To find out what 1 pip is. Once you find out what 1 pip is, you log it into our lot size calculator, which is this. These are the mathematical things that we use. I'm not going to explain why I got those numbers. It's just something that you just need to know, okay? And then you can figure out how much the lot size is. And then you can also figure out how much your reward is based on that as well, okay? Now, you're probably thinking, okay, but why do I need to know my risk to reward? Okay, why do I need to know this, and why is it important? Okay, which is fine. You guys probably don't know, or probably you do know, but I'm going to repeat it to you guys so you can remember. Okay, risk to reward ratio helps you when you're on a losing streak, and it helps you when you are trading, because you can stick to your 5% risk and you have a gain greater than your risk. Okay, so if I'm a trader and I always have a 1 to 2, let's say a 1 to 3 risk reward ratio, in order to, let's say I have 10 trades, okay, and I'm just gonna kind of just move on to the side. Let's say we have 10 trades, okay, 10 trades, okay. I have a 1 to 3 risk to ratio. So let's have trade number 1, trade number 2, trade number 3, trade number 4, okay, and let's actually, no, let's make it easier. Actually, 5. I was gonna do 5 trades, but let's just do the 10. 7, 8, 9, 10. Okay, we have 10 trades. Now let's just go through them. Okay, so first trade, let's say it's a win. Second trade is a win. Third trade is a loss. Fourth trade is a loss. Let's say we go for a little losing streak. Loss, win, 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 loss, loss. Okay, so in total we have 1, 2, 3, 4, 5 wins and 5 losses. Okay, 50% win rate. Okay, now let's say we had a 1 to 3 risk to reward ratio. So that means that, and we're risking only 5%. Remember, we're risking only 5%. So that means a 1 to 3 would mean we risk 5 to get 15%. Okay, so let's say every time we won, I'm just going to put in brackets, we would win 15%. Okay, so 15% for the winners. And I'm just going to copy and paste it to make it easier. There we go. For some reason, there we go. Boom. Okay, so the winners are 15%, 15%, 15%. Our losers are 5%. Okay? 5%, 5%, 5%, 5%. So, in total, we have, in percentages, we have a 50% win rate, by the way. In total, we have winners, which will be 15 times 5, which is, if I just get my calculator out, because I do not want to do mental maths right now, times 5 is around 75% win, 75% growth. Okay, bearing in mind we have losses though. Loss, 5 times 5 is 25%. Okay, so that means in total, we have a positive number, which is plus. We had 50% growth on our account. Okay, the reason why this is the case is because we have a 1 to 3 risk ratio, guys. This is just an example, but that shows to you that even with a 50% win rate, right, we can still be profitable. We can still make money. Okay, we actually had a 50% growth on this, just for example, account. The reason why it's really important to understand this is because this is what's going to help you as a trader become profitable. Okay, so like I said, guys, I'm not going to explain to you the risk management protocol that I go through at the moment, because I need you guys to understand the essentials. But understanding this, right, you will know exactly how profitable you are, because now you can actually forecast your trades. You can do this for 3 months, let's say, understand your win rate. Okay, cool. Am I profitable? Okay. You can have around a 30% win rate and still be profitable. For me personally, I need to have a 28% win rate to be break even. And that's because I try to go for Again, a 1 to 2.5 risk to reward ratio, which is here. Okay. And the reason why I do that, I know this is because I take around 18 to 20 trades per month. I know that if I take 18 to 20 trades per month with around, let's say 28% win rate, I am at break even. Okay. If I do 18 to 20% trades per month and I have a 50% win rate, I am profitable. Okay. Anything below 28%, I know, okay, I am not profitable this month and I need to work on my strategy, or I need to work on what went wrong that month. Okay. So that's pretty much it, guys. I know we went through a lot and it was a bit tedious with the maths, but as long as you can follow these rules and you can follow this, you will start to see a lot of money come into your account. It might not be the full 100% money that you think you're going to make, right? For example, here, you would think, oh, 75% growth is amazing, and 20, but then you obviously lost 25%. Overall, we're 50% up. We're still profitable, right? So it's totally fine when it comes to the market. It's totally fine when it comes to you and your profitability. Okay. So, guys, that is the end of day 5. If you guys are stuck on anything, make sure you comment it down below. I am going to respond to you. If you are unsure with anything, if I rushed anything, just drop a comment down below and I'll try and explain it as thoroughly as possible. But that is it with risk management essentials, guys. I hope you guys have a good day. I hope you learn more and earn more. And guys, I'm so happy that you are following through the bootcamp. Make sure you do follow from day 1 to whatever day we end. But guys, I'm so happy that we're doing this and I'm committed to keep teaching you guys and give you as much value as possible for free on YouTube. So the greatest thing that you guys can do for me is subscribe, like the video, and share it to your friends that wants to hop onto the markets and learn. But other than that, guys, I'll see you guys in day 6 of the bootcamp.